Hello and welcome to BQ Primer. Very good morning to all the viewers. I'm Hiral Tatia. You're watching Stocks in Focus, and you have Som Distilleries, which reported second quarter numbers. Clearly, if you go to see a 80% growth that we've seen on a year-on-year basis in terms of the profit number, so good growth coming in there. Apart from that, if you see in terms of revenue as well, a growth of around 74% there. The margins have seen a slight dip that has come in, and that's probably because the excise duty has gone up by around 80%. Let's welcome in Mr. JK Arora, Managing Director at Som Distilleries, to understand more about the quarter and the strategy going ahead. Good morning and welcome to the show, Mr. Arora.
Good morning to you.
Mr. Arora, firstly, congratulations on the strong set of numbers that we've seen from a profit and a top line perspective. Has it met your internal expectations?
Yeah, if you look at the second quarter is normally is a weak quarter in the whole year because of Shravan, Shraddh, and lot of religious sentiment. This quarter is generally for the beverage sector it's a weak, but it is much better than our expectation because the best quarter is the first quarter where we had the growth of 51%, and here we have the growth of more than 67%, and PBT has gone up by 88%. So we are satisfied that progress, the acceptance of the brand, the overall acceptability of the company is doing pretty good.
Right. Mr. Arora, so yes, as you mentioned, second quarter is usually weak because of Shraddh, etc. Now, all of that has actually moved to the third quarter this time, right? Does that mean that the third quarter then will be weak?
No way. It's going to be better than this. Because a lot of festivities is there. The Diwali is there, and the it is a all events takes place. The most of the marriages, which are the major consumption factor, and the lot of activities on the thing. So the third quarter is going to be good.
Right. So overall, have you already started to see an increase in terms of volumes? Taking into consideration, you already have the World Cup which has started, right? So that is one of the key due to which consumption increases as well. So are you already seeing that trend?
Yes, you see, if you remember last we talked about the guidance of about 1,000 crore.
Right.
On that time, you guys were saying that so this 1,000 crore is really possible. So now, if you look at, we have already crossed more than 633 crores in the first half of the year. So definitely, we are crossing the what we had proposed and what we have given an estimate. It's going to be much higher than the what we have initially given the guidance. It's much more than that.
Right. Apart from this, in terms of where capacity goes, now capex is around 300 crores that you were looking at in terms of the new unit. However, there has been a recent QIP worth 350 odd crores that has been cancelled. How does it impact business, and what's the plan ahead with it?
You see, it will not impact at all because company is doing very well, and company has got lot of sufficient internal accruals. We are hardly utilizing our bank limits and all. We are quite comfortable. If you look at, we have done the lot of expansion in all three units in this year, and plus we have reduced the debt burden of 100 crores also. So at that, all this expansion work we did at our own by the internal accruals only. So having capacity doubled at the Hassan plant, almost doubled at Odisha plant, and lot of additions in Madhya Pradesh plant. Having done all this and then bringing down the debt by 100 crores, it's a story in itself. If you and as of now also, company is cash rich and having no problem. So our expansion plans are fully on, And not only expansions, we are also targeting at some acquisition as well. Let's see when it progresses, but there is no change in the plan. And uh, you see, we want to do the QIP for want of some good uh, mutual funds or this thing to be in. You see, as of now, funds is not a constraint for the company. But if you have what the elder people say is that if you have a good company around, you go good way. So we wanted some good names to be in the shareholders list. That's why we have this thing planned for it. Otherwise, since people were asking for little unreasonable terms like you will not liquidate further, this, that, I said we cannot get it by the investors. This thing, the company management will do whatever best interest of the company. So when such things comes, we thought, okay, let's withdraw it, and we'll do it at the right time again when actually market needs it or we need it more. So we just withdrawn it. So rather than getting dictated by someone, we thought of going maybe at a later date. So it will not affect the expansion plan or the acquisition plan. No.
Right.
We will increase some debt. We have a lot of leveraging available with us. Our debt is very, very low, and we have a lot of scope to. And at this moment, where the company is, we feel that debt is a better option than equity at this moment.
Okay. So with that, if you have to look at the year as a whole, earlier you were looking at a target of 1,000 odd crores, which we already spoke last time as well, where the idea was that definitely the company will be able to surpass that. And that's what it seems like, taking into consideration the first half of the year numbers. Will you say that it's the best time to now revise the guidance upwards?
You see, you can see at your own that now Q3 and Q4 is going to be better than Q2. So you can see that what the guidance is actually going up. It's this thing. We need not to say anything. I think it will cross 1,200 crores as it is. There's no doubt about it.
Right. So I think that's the number we should be eyeing from here as well. And the kind of expansion plans that the company has, the markets that the company is looking to enter as well, that's going to be an interesting one to watch out for. Thank you, Mr. Arora, so much for joining us on the show and sharing the views. So that's the management of Som Distilleries. In fact, a lot of analysts have actually gone ahead and upgraded their estimates as well for FY24 as well as FY25 with regards to Som Distilleries, taking into consideration that they had given a revenue guidance of 1,000 odd crores, and now Mr. Arora, as he's stating, that 1,200 crores is going to be easily achievable as well. So an additional 200 odd crores that he's adding to his kitty for FY24. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.